morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning, and the equity markets continue to rip higher. Now, before everyone gets a little excited, just want to make one point, as I've been making over the last few weeks. This rally is just kind of getting started. I know there's a lot of news, financial press, like how long can we go and so forth, but just to give you an idea, the NYSE Composite Index just broke out last Thursday, meaning it just took out the high from January or February of 2018. That's a 2-year consolidation, so we're not in some kind of uncharted runaway type territory. We've talked about the other indexes breaking out about a month ago, where they were at about 24 month consolidation. Now, the thing to keep in mind is what can possibly keep this rally going? Well, there's about $3.4 trillion in money market funds. That's the same amount that existed in the March 2009 lows, meaning there is no euphoria. Money has been coming out of the market the whole time, even though the market's been going up. People are just in disbelief of this rally. So that money, $3.4 trillion, if it comes off the sidelines chasing the market, that's one of the things that can drive the market higher. Now we have some fundamentals too going forward. The estimates for the S&P 500 going for 2020 and 2021 are looking for earnings at about 9.5% for 2020 and 10.5% for 2021. Now they might be overestimates, but still the idea is they're quite positive. Furthermore, revenue increase is supposed to be about 4.8% for 2020 and about 4.7% for 2021. So that's pretty good. Now, let's say you don't want to chase some of the high flyers like Tesla or stock like that. What can you do? Well, one index to take a look at that just recently broke out about a week ago is the Russell 2000 Small Cap Index, and that tells us that risk's on. It's still about 6% or 7% off its 2018 highs, but it just broke out. So you can take a look at the ETF, the IWM. It's about 164 this morning, last time I looked. And as long as it holds above about 158, 159, 160 has kind of been the line in the sand for it, but it just broke out to the 52-week high and has some possible more upside. And the Russell 2000 Small Cap Index has been lagging. So this is more of a sign that there's risk on, money's moving into there. So that could be an easy trade. Now, of course, it's not a trade recommendation for you. Consult your financial advisor. Always use your stops. But the whole point is that this market has room to run, has reasons to run, and here's something like the small cap index might be something that just quite hasn't participated in this rally as much as the other indexes. But as always, let price and volume be your guide. This is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week. And if I don't see you next week, have a very Merry Christmas and a Happy Holiday.